Well, good evening, everyone. Welcome to our CalHFA Dream For All 2026 workshop. Glad to have you with us this evening. I know everybody's kind of filing into our Zoom session right now, so we'll allow you to get settled in. We appreciate you taking time out of your busy schedules to learn a little bit more about CalHFA Dream For All. And we have one of our partners with CalHFA, Leanne Walker, joining us this evening as well. So Leanne and I got a chance to work together for the last several years. I think it's like almost well over 10 years that I've worked as a CalHFA preferred loan officer. And so glad that she could join us this evening. So tonight, you're going to learn a little bit more about CalHFA Dream For All, understand a little bit more about the process. What does the product look like? Hear from us about what we've learned we were talking about just before today's session in the last 3 rollouts of Dream For All, and just give you an idea of like what is the next steps for you after leaving a session like this. So you'll learn a little bit more about like how do I go through the process to get registered or how to get prepared for the registration. Coincidentally, the window for pre-registration opens on February 24th and runs till March 16th. We'll talk more about that later on in tonight's class. Again, my name is Jason Maida, so I'm going to be your host this evening along with Leanne Walker. So we're going to kind of co-facilitate tonight's class. I work for an organization called American Pacific Mortgage. We are based out of Sacramento, but serve the entire state as a leading provider of the CalHFA products. Something I'm really passionate about. We teach educational classes usually once to twice a week throughout California through different partnerships in your local communities. But CalHFA is a product that I'm really passionate about. I feel like it's a really great opportunity to help Californians achieve affordable homeownership. As we all understand, it's expensive to live in California, right? And so to have an agency like CalHFA with over 50 years of experience, to have resources to be able to plug into our community is really essential for us. And so a product like CalHFA Dream For All really equips us as lenders to provide the tools you need as future first-time home or future buyers to be able to purchase, hopefully, the home of your dream. So, we want to talk to you tonight about this Dream For All product. And again, a little bit more about the product, the process, and then what we've learned over the last 3 rollouts. Now, this is a very interactive session, so we are going to carve out some time later on in tonight's session to do some Q&A with you as well. So I know there's a lot of questions that I know I get on a daily basis. Leanne gets these similar questions as well too, but we're going to carve out time just to kind of talk through some of the questions you have as an applicant or maybe a future applicant for this program. Now, you can either use the Q&A function or the chat feature within Zoom, and we'll get those questions answered on air. By the way, we're also recording tonight's class. So if you kind of have to step away from your computer or just forgot to jot something down, this will be up on our YouTube channel tomorrow, and you'll be able to kind of look this back as well. You can also obviously share this with any friends or family that are considering this product as well. Okay, so I know we got questions already coming in, so I'm going to keep that window open. Ken, my colleague, is also behind the scenes answering questions for us because we do have a really large audience tonight because obviously there's a lot of interest in this program. So let me tell you a little bit about Dream For All and really what Dream For All does. Most of you know this already, but essentially Dream For All provides up to 20% of your sales price in assistance or $150,000, whichever is less. Now, these funds can go towards both down payment and closing costs of your home purchase, depending on how you want us to structure your financing. Now, these funds are borrowed funds, so they're not forgivable. These need to be paid back when you either sell the home or if you refinance in the future. Now, there is a one-time refinance option that we'll talk a little bit later in tonight's class about what that looks like. But you do have one refinance option with this program. There are some qualifiers to that, which I will go through with you in just a minute. Now, in the Dream For All program, it is a shared equity appreciation program. What that means is that when one of those events happens, like refinancing for the second time or selling your home, then that appreciation would be due and payable. So it's 20% shared appreciation if you're a moderate income housing buyer. If you're a low income housing buyer, which is someone that makes less than 80% in income per year, then it's 15%. And tonight we'll walk you through the appreciation calculator as well too, or calculation, I should say, just so you can understand in a real-time scenario what that would look like upon sale of a home. Now, as I mentioned earlier, the pre-registration lottery window opens on February 24th and it's open until March 16th. So one of the questions we get all the time is, do I have a higher chance of acceptance if I apply earlier? Well, guess what? No. The window's open just to allow all applicants to be able to get access to be able to register for the program. So whether you do your registration on February 25th or March 16th, you have the same access and eligibility as any other applicant. So that window is providing you an opportunity to get plugged into the program and to complete your application to be considered for the lottery. All right. Now we got questions flying in. Ken's doing his best to answer those. I'm going to take a couple questions as we're chatting already here, but I do want to walk you through the guidelines in just a second. One of the questions is the percentage of shared appreciation determined by the borrower's income at the time the loan is taken or at the time the shared interest is paid? So the shared appreciation is going to be based upon when, or the level that you're at, whether it's low income or moderate income, is based upon what your income is at the time of origination of the loan. Okay, so that will be, so if you make less than 80% of the median income at the time of origination of your loan, then you would have the 15% shared appreciation. Another question was, is Dream for All available to permanent residents, green card holders? And the answer is yes. So there were changes. I think that's a big misconception. There were changes with government insured products like both FHA and USDA probably about 4 months ago that required you to be a permanent resident. This program follows Fannie Mae guidelines, which does not require permanent residency to be eligible. Okay. All right. Thanks for those questions. Now, from a guidelines perspective, the Dream for All does have some different nuances than some of our other CalHFA products. So I want to make sure that we provide clarity for those of you that aren't aware of some of the first generational requirements. So all borrowers must be first-time home buyers and plan to occupy the home as their primary residence. So no co-signers are allowed on a program like this. And for all CalHFA products, you can't have a co-signer to be eligible. Now, one of the buyers must be a first generational buyer, meaning they haven't owned a home in the last 7 years and their parents do not currently own a home in the US, or at the time of maybe a passing that they didn't own a home at that time. Now, one of the questions I do get often, not often, but I do get this question is, am I still a first generational buyer if my parents own a mobile home that's in a park? So like I just had that question last week. So if the family member owns a mobile home that's in a park and they lease the land, so they don't own the mobile home, then you are still considered a first generational buyer. Minimum credit score for the program is 660 for a low income housing buyer, 680 for a moderate income housing buyer. And the guidelines allow, we call it debt to income ratio, which debt to income ratio, simply put, is looking at your pre-tax income versus your expenses, things like credit cards, personal loans, car loans, as well as your housing expense for the new home. That would be the principal and interest, the property taxes, the insurance. That cannot be higher than 45% for borrowers that are at less than 700 credit scores, 50% for borrowers that have 700 or better credit scores. Now, the Dream for All program also has income limits that differ based upon the county that you plan to purchase in. Now, we spotlighted a few counties here, kind of just give you a wide swath of different counties across California. You can see those on screen here. Ken's going to go ahead and put the income limits link in the chat. You can check that out. So if you're looking at a specific county, you can reference that. So keep in mind with the CalHFA product, we are looking at applicant income when it comes to qualifying. So if you are looking to qualify for the Dream for All program, we will consider all income that's on the application as it relates to those income limits. And we are just getting a lot of questions coming in, Leanne. So I'm gonna take a couple other questions, and it's gonna kind of knock us off our slides here a little bit. But I just want to make sure we get some of these answered. We have a really large audience there, which is not a surprise because there's a lot of excitement around the product. We answered this question, but let's answer this one. Okay, so how do I prove that my parents never owned a house and are not citizens or do not live in the US? Do I need to provide any documents? Leanne, do you want to take that question?
Sure. Good evening, everyone. So when you go to apply in the portal, you will have to fill out your parents' information. So we'll need your both of your parents' name, their date of birth, their current address, date of death if that applies. So if you do not have any of your parents' information, then we will require that you provide a birth certificate. So that's only needed for the borrowers that are considered first generation. So you
Yep.
will have to fill out your parents' information.
Perfect. And so that was another question we had very similar to that was we had another question just below that was my parents do own a home. My husband's parents never owned a home. They never lived in the US and are both deceased. How do we prove that? I think Leanne answered that. So it's kind of different scenario, but very similar, still the same verification process. And then if you're married, do both of you have to apply for the CalHFA loan? So no. If you decide to apply individually, you can certainly do that if you so choose to. All right. Thank you for the questions. I know we have a lot of them coming in. Ken's also trying to keep up. He's over there typing away your answers. But I'll also try to grab some of these questions as we're moving through tonight's session. So let's talk a little bit about what does CalHFA Dream for All look like in a home price or a home scenario. So if we were to look at, and you can see on screen, a sales price of $500,000, and we add in the Dream for All program, then there would be a voucher eligibility of up to $100,000 or 20% of the sales price, right? So when you think about purchasing a home, there's not only the down payment requirement, but there's also closing costs and what we call prepaid items to purchase a home. Now, with the Dream for All program, you can use some of that voucher, that $100,000, to not only cover your down payment, but also for a portion towards your closing costs and your prepaid items. Now, most clients will elect to have that entire 20% go towards their down payment and then pay the closing costs out of pocket, which you can see our scenario here would be somewhere around $10,000 to $15,000, as we generally estimate 2 to 3% of the purchase price for those expenses. But you do have the option of, as we can see just below that, using a portion of the voucher. So $85,000 in this scenario to go towards the down payment, and then the other $15,000 to go to those closing costs and prepaid items. So I'm basically limiting what I would have to pay out of pocket. So there's different ways that we can construct the financing depending on what your goals look like and ultimately kind of where you're trying to land from a monthly budget perspective. As you can see, when we compare those two budgets, clearly there's a bit of a difference. But if that trade-off is worth it for our clients because of just limitations on cash, out of pocket, we can certainly construct the financing in such a way. So this is what the shared appreciation example looks like. And I'm just going to walk our class through this really quick because I think it's important to understand this is not free money that you're receiving. It is a loan that you're receiving from CalHFA, and there is a shared appreciation trade-off with that loan. It certainly provides an incredible opportunity to get access to homeownership, but I think it's really important to understand the mechanics of the program. So this appreciation example can also be found on the CalHFA website, but I thought I would just walk our class through it just really quickly so you can understand a little bit more about how the program works. So let's say we purchased at $500,000 as our home price today. So that would be our established value of our home at $500,000. And in that scenario, we decided to use a 20% or $100,000 Dream for All voucher to purchase our home. Therefore, we financed $400,000, right? Well, let's fast forward 5 years later. We're in a position now, the home has gone up in value. The home is now worth $140,000, right? So now our home has appreciated by $140,000. And at that time, if I decide to sell my home, that shared appreciation, the 20% that you would be paying back to the state or CalHFA, in addition to your original voucher of $100,000, would be $28,000. Now, keep in mind, I also have another $112,000 that is now basically my shared appreciation proceeds that I walk away with. that can go towards the next purchase of my home or whatever I choose to do. But ultimately, that would be where my shared appreciation would be the $28,000. So, when we look at, an example like this, we sell our home. That means, the way this scenario looks is that now 5 years later, my balance is essentially paid down to $370,000, right? My Dream for All loan payback would be my $100,000 plus my $28,000. And then my overall home equity is $142,000 at the end of those 5 years. So that hopefully paints the picture for our class of like, this is what it looks like if we were to forecast out 5 years from now, and really kind of really what the mechanics look like with Dream for All. Again, this is a loan that you're receiving, but there is an incredible upside opportunity as we consider, really the power of home ownership and an asset that appreciates over time. This is just another way of looking at shared appreciation, taking our same example and seeing over the next 15 years, ultimately kind of seeing with an average appreciation of 4%, what that equity position looks like as we span out over time, as we continue to pay down our mortgage, as our equity grows. You can see, we do have a cap on the Dream for All shared appreciation, even if we span out over 15 years, but you can see the equity growth over time. All right. Leanne, do you want me to cover the refinancing part or what
Either
works for you?
way. I'm
Okay,
good.
okay. I'll cover it really quick. We're
Okay.
actually starting to have some of these conversations right now because, some clients are starting to consider refinancing. So some of our clients that purchased over the last 18, 24 months are now have an option to take advantage of a one-time refinance option with Dream for All. Generally, our recommendation on any refinance is to have your new refinance rate be at least 1% lower than your existing rate, or better, of course. So if you purchased your home at a 7% interest rate, then we would want to consider refinancing at a 6% rate or better. Dream for All does require you at least to have 12 payments made on your mortgage, your original mortgage. At least reduce your payments by $50 per month, as well as a 0.5% reduction in interest rate to be able to participate in a refinance. Now, the nice thing about that one-time refinance is you're not having to pay back that shared appreciation when you are eligible to refinance. We certainly would want you to save more than $50 a month in refinancing to make the math make sense to refinance, because refinancing your home does not come without cost. And our methodology in refinancing is that we want clients at least to save a 1% interest rate, because that allows them to have a break-even point of generally about 12 months or less in a new refinance. Because if we can drop their rate by 1%, it creates enough savings to justify the cost of that refinance. All right, I'm going to turn it over to Leanne to talk to you a little bit about kind of the registration process for Dream for All.
Okay. So as Jason mentioned, that the portal will be opening next month, so you have a limited amount of time to apply. So your first step is going to go to the CalHFA approved lender. You have to get pre-approved first. We have a special pre-approval letter that the lender will fill out for you and give that to you. So that's why you have to go to the lender first. Make sure you are pre-approved for the program. They will fill out that pre-approval letter, and then they will give you the pre-approval letter. And then that's what you're going to use to upload when you register in the portal. There are going to be 2 homebuyer education courses that you need to take. You're going to have to take the standard 8-hour homebuyer education course, and then we have a second one, which is the shared appreciation. So like Jason mentioned a little bit of how the shared appreciation works, we want to make sure that you truly do understand before applying for the program. Now, you don't have to take the homebuyer education course to apply, but we highly recommend it because we don't want you to go through the whole process, wait, and then you get selected, and then you realize how shared appreciation works, and then you decide this is not the program for you because this program's not going to work for everyone. So we do recommend you take that shared appreciation course that is on our website. It's free, takes about an hour, and it goes in great detail how the shared appreciation works. So we recommend you take that up front, but again, you don't have to take it to enter into the portal. So the portal will be open February 24th to March 16th.
Mhm.
Like Jason mentioned, it's not first come, first serve. So you don't have to rush out on February 24th at 8 a.m. to register, but we still don't want you to wait to the last minute. We had this happen last time. People waited to the last minute. Once the portal closes, it closes at 5 p.m. on March 16th. After that, there's no exception. So don't you don't have to rush to be the first one, but don't wait until the last day. Try to get that done ahead of time. Um, Once the portal closes, there's not a certain, we don't know the time yet because we do investigations to make sure that the borrowers are first generation home buyers. And so it could take, 3 weeks, could take 4 weeks. We don't know yet.
Mhm.
But once we do the selection, everyone will be notified. So everyone that has submitted an application will be notified one way or the other. So you'll either be notified, sorry, you didn't get selected, or you didn't get selected, but you got selected for the wait list, or congratulations, you got accepted. If you get accepted, then you will get a voucher, and the voucher is good for 90 days. So now you can start looking for that property, knowing that you got awarded the program. So you have 90 days to get into escrow, and the lender reserved the loan with us. So you don't have to close within that 90 days. Just be in escrow, and the lender reserved the loan with us with that within that 90 days. So it just gives you that peace of mind knowing that when you're looking at houses and you're getting ready to put an offer in, that you know that you got selected for the program. So again, it's a random selection. So not everyone that applies is going to get selected. So we just want to make sure everybody knows that it's not a guarantee. It will be a random selection, but everyone will be notified no matter what.
Perfect. Awesome. Thanks, Leanne. Um, all right. We're going to move into our Q&A portion of tonight's class. And I know we've already been taking some questions. What I'm going to do is I'm going to kind of read off some of the questions. I'll take some of them and I'll also give some over to Leanne as well too. Because we have a lot of questions. I know Ken's trying to keep up with them, but this will be good to kind of spark some conversation with class. So one question is, and we talked a little bit about this already, is Dream for All available to work permit holders who don't have a green card yet? So the program follows Fannie Mae guidelines. So there's a list of eligible, immigration statuses that we can take a look at. So I would say let's take that question off air. And if you want to just let us know offline kind of what your current status is, we can check for you. But I think the important takeaway is you do not have to be a permanent resident to access this program. Um, and then another question was, if my spouse wins the loan or the lottery after buying my house, can I be added as a name for the house? Leanne, do you want to take that one?
Yes. So, no, we don't allow anyone to be added onto title after the close of the loan. So, if you want to be on title, you have to apply and meet all of the guidelines.
Perfect. One question I get a lot is that if I apply by myself into the lottery, and then I get selected, can I add another person to my voucher if they qualify? That is allowed, but the big but is that we have to make sure that the first generation buyer that was originally on the winning voucher is part of the financing transaction.
Yes. And Jason, just so
Yeah,
you know, for this year, it is going to have multiple places. So, say two
perfect.
borrowers are buying together and they're both first generation, where last time it only allowed them to
One.
put one. Now
Yeah,
it will have where they could put both of them. So now if
perfect.
only one has to be first generation, but if both borrowers are first generation, you could put both of their information in there.
That's perfect. Oh, that's awesome. That's great to know. Yeah, that was one of the dilemmas I think buyers had a couple years ago was not being able to have both designations. So that'll be super helpful.
Right.
Good to know. Okay, so another question was, does the interest rate in CalHFA's refinance program follow closely the rest of the market, or is it typically higher than the market? So with CalHFA programs in general, they're all set by CalHFA daily at 8 a.m. during trading days. So CalHFA Dream for All refinance is no exception. So that rate is set every day by CalHFA. Today's rate, for example, was 6% for the Dream for All program refinance, and then the CalHFA Dream for All purchase has a different rate. So if you do get the Dream for All voucher and at some point you do decide to refinance, it does have to go through a CalHFA Dream for All refinance loan.
Jason, actually, no, it doesn't.
Oh, it doesn't?
It just has to go through a CalHFA approved lender. We just offer,
Oh,
so you
okay.
can, yeah. So if they want to refinance, it
Okay.
can be any first, as long as it's a conventional first mortgage.
Oh, that's good. Okay. Well, that's that. I'm glad. Okay, that's good to know. Um, all right. So, question, I'll give you this question. So, if you're a foster child, do I still need to put my biological parents' info on the app?
No, long as you provide the foster care documentation.
Okay.
So for anyone that's questioning what we're talking about, in lieu of the first generation, if you spent any time in foster care, then we consider you first generation, and then we don't need your parents' information. But you would have to provide documentation to prove that you did spend time in foster care.
Perfect. So, we get this question a lot. You and I were talking before we started our class. How many people get selected for the program?
It varies. So it just depends on how much funding we have. Um, and we won't know that until the waitlist people from last year or the previous year were done.
Yeah.
So it just really varies. We do a large waiting list because there's sometimes fallout. So when people get selected, because there's no time frame, we don't know exactly when the vouchers are going to
Hmm.
be selected. So we see sometimes where someone's may decide to buy a house with our regular program. They don't need the Dream for All. So then
Yeah.
we go to the someone on the wait list. So we don't know yet how many people are going to be selected yet.
Perfect. All right. And question was also about the homebuyer education, which is, can I substitute the Fannie Mae homebuyer education course with the Dream for All certificate?
No.
Yeah. Yeah. So yeah, you have to take the shared appreciation class. We'll provide the links to the training as a follow-up to tonight's class, so you have that. But yeah, it is specific to the Dream for All program. All right. And okay, we answered that. Okay, good deal. And then got the foster care question. Okay, so we got that. Okay. All right. So one question was, and you probably have the answer to this. So are there more funds this year than the last few years? So will there be more vouchers potentially in circulation?
Again, we don't know yet because part of the funds, so the overall funds are a little bit more than the last time,
Hmm.
but part of those funds were given to people on the wait list from 2024. So we don't know yet. Those vouchers should be expiring mid third week of February. So we won't know until then how much money we will have for new reservations for this year. So it's just unknown right now because part of the funding that we got for this year went to give everyone that was on the wait list a voucher. And not everyone on the wait list is probably going to use it. So we won't know until those vouchers expire.
Yeah. I think you were mentioning before we started, we have 18,000 applicants the last lottery.
Yes.
Yeah. So, so that's going to be kind of a TBD situation. We'll just have to kind of see, what that looks like as the lottery gets going. Okay. So if you, okay, I guess we can both answer this question. So if you sold your house, how many years do you have to wait to qualify? So you want to take that one?
Yeah, so that's a probably a two answer there because it just depends. So
Right.
as a because for the program, all borrowers have to be a first-time home buyer. Our definition of a first-time home buyer is someone who hasn't owned their primary residence in the last 3 years. But at least one borrower has to be first generation. First generation home buyer means you have not owned anything in the last 7 years and your parents do not own now. So it
Right.
just depends. If you're buying by yourself, then you have to be the first generation home buyer. So you cannot have owned anything, not on title, not on a mortgage, not on deed in the last 7 years, and your parents do not currently own now or didn't own at the time of their death. Now, if two of you are applying together, then at least one of you has to be the first time home buyer as far as 3 years, and then the other one has to be the 7 years and their parents do not own.
And just to clarify for the audience, so that's not doesn't currently own now. So if someone has a parent that owned 20 years ago, but they don't currently own, would they still be considered first generation?
Yes. So it's just long as they do not own right now or they didn't own at the time of their death.
Perfect. Okay. Great. Okay. Let's see. And then we had a question in the chat. I was just looking. I think Ken might have answered this, but is there any part of the program that is a grant? That is no.
No.
So this is truly a shared appreciation loan, as we kind of went through our exercise earlier. And then I think we also had a question that came in. What's the dollar amount of the voucher? So again, it's 20% of the sales price or $150,000, whichever is less. Um, the other question I get often is, in addition to the voucher, are there limitations on how much I can add to the down payment? And that answer is it's a maximum of 5% of the sales price, additional on top of the voucher. So that is a restriction that has been in the last two rollouts that we've had with Dream for All. But yeah, there is that restriction. So you can't add any more than that when it comes to down payment. Um, and then a question that I get often is, are there other programs that do offer a grant? So not with our CalHFA suite of products, but keep in mind with Dream for All, it's a standalone assistance program. So it cannot be layered with other first-time buyer programs. So it is truly a standalone. I do get also a question, and Lan probably can help out with this as well too, is some of our clients choose to look at below market communities that have restrictions around, how you take ownership. There's also other deed restrictions. Leanne, can you comment a little bit about what you see with below market communities in Dream for All?
Yeah, so you can't combine Drain for All with a below market rate. So below market rate is so that's basically that's where a lot of people get confused with shared equity and shared appreciation. Dream for All is shared appreciation. Below market rate is the shared equity. That's where they're selling the property to you at below what the market rate is. And then when you go to sell, then you have to all that equity is not yours. So that's why Dream for All will not combine with the below market rate because then you would have no equity to keep. So
Right.
the whole idea is for the program is still for you to keep some of the appreciation, some of the equity you have. You're just sharing some of it, and then that gets rolled back into the program. So that we can eventually offer this program every year. As people start paying it back, it goes back into our pot of funds. So you can't combine a below market rate property and Dream for All. You would have to choose one or the other.
Perfect. We had a follow-up question about the shared appreciation training versus the Fannie Mae homebuyer education. So just to answer that question, so the reason why the Fannie Mae homebuyer education does not qualify for the shared appreciation is because this is a very unique product, and there are elements to understanding shared appreciation that can be found in that 1 hour education that don't exist in the Fannie Mae homebuyer education courses, or course, I should say. Um, Okay, let's see. This is a question. I don't know if you can comment on this, but person asked, will waitlisted registrants from previous years be placed ahead of those who will be waitlisted this year on the waitlist?
No, it's a brand new application, so it everyone will have the same opportunity. Doesn't matter whether you applied before, got awarded before, was awarded the wait list. Everyone is good. It's a randomized drawing, so it's not looking to see if anyone has been applied before. So no one
Perfect.
will have any preference over that.
Awesome. And then someone was asking for the 1 hour educational course. How do I get access to it? So we'll, like I said earlier, we'll put that link out either in the chat. Ken can put it out there for us. Oh, he'll just email it with the follow-up video here from tonight's class. So, but that is available to you today. One question I'm getting, I guess we know the portal is going to open up February 24th. Where can they access the portal?
The link will be on our website.
Okay. So I would encourage our class, if you haven't already subscribed to the CalHFA e-newsletter, I would encourage you to do that. But also, to be obviously be ready to go when February 24th opens up to be able to get into the portal. But you can find that at calhfa.ca.gov, and you can, make sure that you're registering timely. Okay, let me see if we're just got questions.
One
Um,
thing I do want to mention,
yeah,
because I did see a couple questions pop up about approved lenders.
yeah,
So make sure whoever you're going through is approved to do the program and make sure they are truly pre-qualifying you. We did have this happen before where some people weren't truly pre-qualified. They
yeah,
got awarded the voucher and then they weren't able to use it because they weren't qualified. So make sure whoever you go through that they are making sure you are pre-approved.
yeah. That's a good point. Yeah, obviously our team's a leading provider of these programs, and obviously, we're highly educated on how to facilitate these programs. So we'd love to be able to help you in the process. But to Leanne's point, yeah, you do have to work with a CalHFA approved lender. I've fortunately seen some cases where some clients did get approved by unapproved lenders, and that obviously creates a little bit of an issue for buyers. But if you, I know Ken's going to provide all of our information on our website that we have our pre-approval process. We meet individually with every buyer that's applying to the lottery just so they can understand the product, get them fully qualified, and then get their pre-approval ready. So it's a really simple process for us. You do complete an online application. We do have to do a soft credit check to verify you hit the minimum credit scores. You'll upload some of the required documents, and then we go through the consultative process with you. So Ken will be able to provide more details for our class if you're interested in following up with a pre-approval with our team. Um, and then a question that came in, which is, do I need to be pre-approved before applying on February 24th? So yeah, so ideally you want to be pre-approved before February 24th. If it happens to be after that, you just have to get into the registration window before it closes on March 16th. But we've been actively pre-approving clients throughout the last couple months. So, and we're currently pre-approving people today. So if you are interested in that, we would encourage you to start that process as soon as possible.
And yes, you won't be able to apply for the program unless you get that pre-approval letter. So you have to go to the lender, they pre-approve you, they fill out that pre-approval letter, and then that's letters, you're going to have to upload it in the portal when you register.
Perfect. You and I have had this conversation about this particular question, so I don't know if you want to take this. So, if in this program it's only available for primary residences, but the home can't be rented out down the road, correct? Question. That was the question.
We don't have any strict guidelines that say you can't. The program is geared toward owner occupancy, so it's not meant for someone buying this to turn it into a rental. But there are no restrictions. If you do, you just won't be able to qualify for the one-time refinance. You have to owner occupy in order to get that one-time refinance.
Perfect. We had a question that came in around like discounts for medical professionals with this program. There really isn't any discounts. We have within our organization, we offer discounts through some of our partnerships for state team members, through some of our university network partnerships, but there's really no specific like medical professionals discount with Dream for All. Um, and then question I get often, which is, can you buy a multi-unit with Dream for All? You cannot buy a multi-unit. You can buy a single-family residence with an ADU, but not a multi-unit. So if it's a 2-unit, 3-unit, or 4-unit property, is not eligible for this program. Ken just put in the chat for the audience the link for the pre-approval process. So if you do want to go through that process with us, we'd love to be able to support you and get you ready for the lottery next month. So that link can be found in the chat. Okay. Leanne, I don't know if you can see this one in the chat, but the question was for the verification of being a first generation home buyer, if the documentation is in another language, do I need to have it translated for CalHFA?
That is something that I'm checking into. As of
Okay.
right now, I'm not for sure if we're going to require it
Okay.
or not. It would be helpful if you could, but I don't think that's going to stop anyone from getting selected. We may just reach out to
Okay.
see, but I'm not for sure yet.
Okay. I had a question in the chat that said, if we exceed the income limit, are we still, I think it's exceed, I think is what they meant to say. If we exceed the income limit, are we still qualified to apply? I would say before we make assumptions that you don't qualify because you see the income limits, let's have the conversation and maybe have you get your application submitted because what you may interpret as your income may be look differently in the lens of a lender. So I would encourage you to at least apply and see what your income looks like, because there's some elements to your income, things like bonuses or commissions or overtime that might not be able to be factored into your qualifying that could keep you within the income limits. Okay. All right. Ken, let me know if I'm missing anything. I'm trying to keep up with what I'm seeing. I think like our Q&A looks good. Okay, I'm gonna take this one here, which
Yeah, it's
is
just
just
the
came in
ones
the
coming in the
chat.
chat right now.
Okay. My fiance and I are planning to get married later this year. We are both first-time home buyers, but only she is a first-generational home buyer. Do we have to be married to apply, or can we apply as co-borrowers? Also, my credit score is excellent, but hers is not that good. Can we still apply? So there is no marital status requirements to apply. You would be applying jointly still for the loan. Still, same rule applies. One of you has to be a first generational buyer. And we do look at the lowest middle credit score between both borrowers. So we'll have to see what that looks like for you in your scenario. But regardless of marital status, that doesn't impact the application at all. The lowest credit score for a moderate income buyer has to be at least 680 for the program. And again, for low income housing, it needs to be a middle score of 660. Okay. Another question, can you buy a house anywhere in California once you get a voucher? So it is a state program. So yes, you can buy anywhere in the state. There are some underwriting guidelines around that. It's more of a bigger conversation around, what type of work do you do, commute distance to the property, all of that stuff. But ultimately it is a state run program. So anywhere in California that would be eligible. Of course, the income limits do vary by the county that you're going to purchase in. All right. And then another question was that if I purchase a home for $1 million under the CalHFA program, and the appreciation repayment is capped at 150, I think that it meant the shared appreciation voucher at 150. Do I still owe 20% of the home's appreciation? How much how would this work if the appreciation share is 15% from the beginning? Leanne, do you want to take that question?
Yes. So the shared appreciation is going to be equal to the percentage of down payment you got. So if you were capped at the 150,
Mhm.
say it end up being 15%, then 15% would be your shared appreciation. So it's going to be based on what the percentage of down payment that you get.
Perfect. Another question, we get this often, which is, are there limits on early payment of the mortgage or paying off the principal down? You want to take that one?
Yes. So yeah, there are no prepayment penalties, but once you pay off either the first mortgage or if you pay off just say you don't pay off the first mortgage, but you decide you want to pay off the second mortgage, the 20%, then it automatically kicks in the share depreciation. So you can make payments are not required. So that 20% or 150,000 is a second lien on the property. So there are no monthly payments. There's no interest on that portion of the loan. You can make payments if you want. Again, no prepayment penalty, but once it's paid off, it does trigger the share depreciation.
Perfect. Okay. And I know Ken just answered this question, but I'm just going to kind of just read this back to the class because I get this question a lot, which is what's the maximum sales price on Dream for All? There really isn't a maximum, but mathematically, the way it works with the maximum contribution of 5%, the max eligible purchase price, I think lands somewhere like around 1.3, give or take. So when you factor in the 150 is the voucher amount, and then maximum contribution is 5%. It gets to about that sales price just because those are the limitations based upon where the program is designed. But there really is no maximum sales price technically with the guidelines.
Right. And
Um,
then you also have to factor in there's an income limit. So the
right,
max
and there's the income limit. So
income is
yeah,
only going to
exactly.
qualify you for a certain amount. Yeah.
Right, absolutely. Okay. You guys are doing great with your questions. Okay, I think we're there, Ken, unless you see anything else that I'm missing in the chat.
No, I think we're good. And, if anyone has follow-ups, they can follow up with us. So,
Okay, perfect. Yeah, and obviously we're going to be available to answer any questions for you offline. So, we would encourage you to reach out to us any questions that you do have. I wanted to provide all my contact information, so feel free to reach out to me any one of those ways, whether it's by phone, email. You can access all the workflow for the pre-approval process with us by visiting our website. It's just my name, jasonmaida.com, or you can go to mortgageeducate.com. And that can get you started in the process. Obviously, with the recent announcement of the pre-registration portal opening up on February 24th, we are quite active, but we're here to help support you and get you ready for the lottery opening next month. Want to pass along those links to you. And, we also always like to share that, we would encourage you as you're deciding who you want to use for a CalHFA approved lender, encourage you to talk to see what our community says about us. We're proud to be one of the top providers of these programs. So when you look at some of our communities like on Instagram or in Reddit, a lot of great experiences that some of our buyers have shared with our communities. And so we're really proud of that. But and that's why we kind of try to put on classes like this to really inform you and give you all of the essential elements that you're going to need to make a really great financial decision and get you equipped with everything you need for Dream for All. So we hope you enjoyed tonight's class. We did record tonight's class, so this is going to be up on our YouTube channel tomorrow. Feel free to kind of take a look back at that. We really appreciate Leanne spending her evening with us. Coming starting the week here after the holidays, spending some time with us. I do appreciate it. She's been busy with traveling, and so she's got her plate full. But we appreciate you dedicating some time to us tonight.
You're welcome.
Awesome. All right. Well, I know there's questions still in the chat. We're going to follow up with you with direct messages on that stuff. I just want to respect everyone's time. We do appreciate everyone joining us for tonight's class, and we look forward to helping you on the path towards homeownership in the future. Have a good night.